Hi, this is Mark from Right Line Trading. Today is March 7th, 2014, and it is the fifth trading day in March, and I just wanted to go over our results from today. This morning let's see, let's move it back here. I took a trade at 8:59.57. Which was I actually forgot the fact that the pit was going to open in 3 seconds, and of course the opening of the pit drove the market right down, and it was really a perfect setup, but it's really a cardinal mistake to try to trade the pit opening, and that was and that cost me a trade. The market continued forward, and here we have the 50 going up, the 15 up. We have a clean break of the modified 15, sweeping through like this. And that gave us 15 ticks. And now then the market came down, and this was a tremendous entry. You don't get them any sweeter than this, but this occurred very, very fast. The time on this was at 9:28, 9:28, 9:28, 9:28. This is all occurring in the same minute. This just flashed across the screen, which is why retrospective reviews, without taking a look at time frames, really are unhelpful. This would have been a great entry, except for the fact that we were just not fast enough to catch the trade. In fact, I don't think there's any human being who had the reflexes fast enough to catch this trade. So this was a tremendous trade that would have gotten us in here and brought us all the way to here without a retracement, 61 ticks. It just wasn't possible of calling that trade or even getting it up on my trader. Then the market started chopping laterally. Now this was a C candle. It just still occurred on a falling 50. And we really like that 15 and the 50 to be in the same direction. So trying to stay conservative after one loss and one win, I let this C candle go. If we stay really dogmatic and adhere very, very strictly to our rules, we got to wait for that 50 to roll and turn green. I think if the market's rolling and you have this kind of slope on the modified 15, a C candle on a predictive basis, looking at the entries on 1 year of market replay data, this is the strongest entry. And if you're going to take a little bit of additional risk, this is the candle to take it on, this kind of setup. Get more movement. Now this was a potential entry on gold. It would have been a winner, first target. Then I took really what looked like a perfect entry, and this was unlike the entry into I'm sorry again, entry into the pit opening. This is a very, very nice C candle. It had order flow and momentum with it. It also had a triple momentum signal and a strategy signal. 50 was green, 15 was green. Candle only went 3 ticks. And it just shows that there are some days where perfect signals are simply not going to work. Not everyone is 100%. I then actually went out a little bit on a limb like I probably should have done on the last C candle that I showed you. The 50 was sort of flat and just about to roll. The modified 15 was heading down hard, took the short, and got 12 ticks. Now, unfortunately, today I had to stop early, which really was a shame because I felt that if I could have traded on, we could have gotten a lot more real nice trades. And you can see right here we would have gotten this bounce off the 50. This is a sort of a gimme trade here. And that would have given us some nice profit. Would have given us 2 targets at 10. So there would have been additional trades. But that was my morning for crude. I had plus 12 and minus 10. I'm sorry, gold. I'm getting mixed up here, and I apologize. That's gold. Now, on the Russell, I do not believe we had a trade today at all. It was very tough to get into the Russell today because it broke straight up. Opened and just broke straight down. And you see when it fell, we don't trade the Russell open. So the Russell moved down. And this was a potential short, but I don't like to take a short on a hammer. This does not show that there's much selling conviction here. And of course, bam, down it went. Then here, on this entry, we've got a tremendous space between the 50 and the 15. I mean, look at the MA diff here. And at the time, this MA diff was significantly large. It was larger than 15 ticks, which to us tells us that the move is overextended to the downside. Now, listen, we're just playing statistics. Obviously, we don't have a crystal ball. We don't know that the market's going to continue down and down. But that made this short entry on the C candle a high probability short or a high risk short. So you have to stay away from it. And down it went. The Russell broke to the upside on a falling 50. This is something we would not touch. And again, if you're going to go out on a limb, here's where you would take your risk. 50 is rolling. The C candle entry right off the modified 15 that's streaming down super hard. Here's where you may want to go short. I just elected to stay conservative. I didn't do it, and I think in this particular case it was probably a mistake. So we really didn't get this was the I would, you know, in retrospect, this was probably the perfect Russell setup. Rolling 50, modified 15 gives you this really gives you a huge amount of information. When you've got that modified 15 coming down with that kind of slope, and then the C is a little bit more than just a retracement signal. It not only tells you that there's retracement, but it engulfs all the buyers in B. In addition, it had order flow and momentum with it and a triple momentum signal. That's a powerful signal. It's close to the 50. MA diff is very tiny, maybe 3 or 4 ticks. We're looking for an MA diff of less than 15. We really had a lot going for the trade here. And when you put the whole thing together and you look at all the positives and the negatives, this really, I think, was a trade that was worthy of taking the slightly additional risk of having the 50 green. Now let's take a look at crude. Now this is a really nice excuse me, trade to the upside, order flow momentum with us, which went 7. Then This was just really a good signal. This is the second really good signal that failed today. We really don't get these that often. Here's the retracement. 50's green, 15's green. Triple momentum signal, candles outlined in blue, order flow, stochastic, and momentum are with us to the trade, and all it managed to do is give us 4 ticks. Not a lot, and not enough. So 2 great signals that failed today, and I took 1 trade right into the pit opening. And then there were really quite a few trades that I really should have taken, but just did not. Now this was a bounce off the 50, which went for 8. This was a really nice entry. I just stood aside because of the pivot, and I think that is the best thing to do. And then, unfortunately, I could not continue to trade. This would have given us a great short signal, and if I could have traded on, that would have been the signal to take. Everything's rolling to the downside, and would have been another winning trade. So I think if I could characterize today's trading, I would characterize it as being overly conservative, and also the fact that actually 2 really good signals just didn't work. So let's take a look at how we did for the day. I had 7 trades. I had 4 winners. I had 3 losers. On crude, I was +8, +7, and -10. On gold, I had +12, +15, -10, -10. Net ticks were +12. Net equity, I lost $400 for the day. The auto trader had 6 trades and had 4 winners and had 2 losers. Pushed out net equity of $100. So it was a little bit of a tougher day for the auto trader. I don't have the auto trader signals on here, but a couple of trades that I took, the one that I showed you here, the auto trader also took. Here, when you get a perfect signal, you're going to get a loss on both the discretionary trade and the live auto trader trade. So today was a little bit of a drawdown, and if I didn't have to leave at 11 a.m., I think I could have turned this net equity around. And in analyzing my performance and in looking back at the markets, I would say that we really had, I really traded overly conservative. And that cost us a couple of really good trades on different markets. I'm sorry, all the phones are ringing here, and which cost us some good trades on different markets. Sorry for all the noise and the distraction, but that's basically our performance. The auto trader continued to move forward, another positive equity day, and I just think that my trading should have been a little sharper today, and if I had a little bit of a longer day, we could have done. We could have pushed out a positive equity day here in the room. So sorry for all the noise and all the bells and whistles here behind me. And I will see everybody back in the room on Monday. I hope everybody has a really good weekend, and we're just going to push forward. We have nice equity for the week. Auto Trader superlative performance for the week. My performance good for the week. We had nice profit this week for the first week in March, and we're going to continue to march forward. If you're interested in a free trial, you can go to www.rightlinetrading.com, and we'll put you in the room for a few days, a week if you'd like. You can give us a call at 1-855-765-6681. Or give us an email at info@rightlinetrading.com. Take care, and again, have a great week.